So when we talk about Form 1116, here's an overview I want you to pay attention to. So I want you to look right now on the screen. So Form 1116, it's about foreign tax credit. So what you want to do is you want to put your first name, last name, and also your identifying number. So this can be your social or your EIN. And basically here at the bottom of it, you have to put the specific section that applies to your situation. So for purposes of this hypothetical situation, we checked lump sum distribution, foreign branch category income, passive category income, and also certain income resourced by treaty. So again, you want to claim a foreign tax credit. So all sources of income that you want to really declare here are pretty welcome. And then part one, basically you have to put first of all on section H, the resident of the country. So here we chose Germany. And again, everything here is fictitious though. I'm just giving you a hypothetical example. And part one, let's move on here. So you basically want to specify for each country the resources, the investments, the income that you actually derive from those geographies. So here we have Germany, Switzerland, and Austria. And so when you actually have total A, B, and C, you have, and for our hypothetical example, we have $200,000. So this is for 1A. So you have to specify the source of the income. So here we put investments, business operations. Ops really stands for operations. And then so you have the income. Then you have to have the deduction also, deductions and losses. So expenses, if you go on line 2, you can see here expenses definitely related to the income on line 1A. And you might have to attach a statements. Now for time's sake here, we're not going to, for brevity's sake, I'm not going to attach the statement, but if you have a question, let us know. We'll definitely get back to you on that. So for expenses, for Germany, we have a 50 grand. For Switzerland, we have 30 grand. And Austria, we have 15 grand. The second screenshot I want to show you here, line 5, you have losses from foreign sources, 10 grand, 5 grand, and nothing. So when you add all the lines, you have 60 grand, 35 grand, and 15 grand. And the full amount is 110 grand. And when you subtract line 6 from line 1A, you have $90,000. Remember, the preliminary amount was 200,000. So when you subtract 110,000 from 200,000, you have $90,000. So that's part one. Part two, you have a foreign taxes paid or accrued. So here you have to check in column J, you have a paid, and you have to put the date paid or accrued. So you put the dates, you put the dividends, you put the interest and other foreign taxes and the total amounts. So here we have 30 grand. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Moving on here, I want to show you part 3. So figuring out the credit here. So basically the amount that we entered on line 8, 30 grand. And so when you follow the math, you have a $10,000. And so when you add lines 9 and 10, you have 40 grand. And so in terms of reduction in foreign taxes, again, here if you have questions, let us know. We'll certainly get back to you and explain things a little further. So we put $5,000. So when you go to line 14, you have 35 grand. So 40 grand minus 5 grand, you have 35 grand. And so line 15, we have a $90,000. This was what we put a little earlier, $90,000. And so you carry that amount all the way to line 17. And in terms of line 18, you have to enter your total amount. So total amount on your form 1040. And so here for our hypothetical example, we put $270,000. And so when you divide line 17 by line 18, you have 0.3. Pretty straightforward. The next screenshot here, I want you to show you that this is line 20. We have individuals. So you put the amount that you had a little earlier, so $200,000. So when you actually follow the math, you multiply 20 by 19. So remember, you have a 200,000 times 0.3. So you have a $60,000. Okay, so this is a 21 and 23. You have so when you add the 21 and 22, you have $60,000. And when you add the smaller of line 14 or line 23, you get $35,000. Pretty straightforward, nothing really complicated here. And so part 4 basically is a summary of credits from separate parts. So basically, again, here some of the information here is fictitious. It's hypothetical. This is for the example of this show. So 25 all the way to 31. When you add those numbers, you have $35,000. And when you enter the smaller of line 20 or 32, you have $35,000. And on 35, you have $35,000. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about the form 1116, and this is about foreign tax credit. Here's the approach I really want you to pay attention to. So when we talk about foreign tax credit, we have to go back to the purpose of the form. So basically, this is a tax form. The form 1116 is a tax form used by taxpayers who have a foreign income and wish to claim a foreign tax credit. And the purpose of form 1116 is to calculate actually the amount of foreign taxes paid or accrued on foreign income, and to determine the allowable foreign tax credit that can be claimed on the taxpayer's U.S. tax return. So it's one of those things. When you file your Form 1040, you want to have an ancillary form in terms of a Form 1116, so you are able to get the proper tax credit for your taxes. And so when you think about it that way, Form 1116 has several benefits. For example, you have avoidance of double taxation. You have a reduction of overall tax burden. You have flexibility in claiming the credit. You have a wide range of eligible taxes. You have carryover and carryback provisions, and you have interactions with foreign tax treaties. So when we talk about avoidance of double taxation, for instance, you are able to prevent double taxation on income earned in a foreign country. So if you are a U.S. taxpayer who has already paid taxes on foreign income, you can use the Form 1116 to claim a credit for those taxes paid. And when you do that, what you have is that you have a reduction in your overall U.S. tax liability. And also, one thing we have found is that by claiming the foreign tax credit, you can reduce your overall tax burden. And the credit is generally dollar for dollar, meaning that the amount of foreign taxes paid directly reduces your U.S. tax liability. So this is kind of cool. And also, you have flexibility in the kind of payments you want to have. So you are able to choose between claiming a credit for foreign taxes paid or deducting those taxes as an itemized deduction. And so in many cases, claiming the credit results in a greater tax savings because of the dollar for dollar reduction that I spoke about a little earlier. Okay, so it's one of those things you have to see what really works for your case, but it's just a lot better to think of it that way. Let's talk about eligibility here. So when we talk about Form 1116, you have all kinds of eligible entities and individuals. And so the following individuals or entities may be eligible to file Form 1116. So you have U.S. citizens, you have U.S. residents, U.S. resident aliens. So we're speaking here about green card holders. You have U.S. corporations, U.S. partnerships, and U.S. estates and trusts. So when we talk about U.S. citizens, so if you have earned income from foreign sources and have paid foreign taxes on that income, you may be eligible to claim the foreign tax credit. And if you are a resident of the U.S., you are basically, if you are considered tax resident for U.S. tax purposes, you may be eligible to claim the foreign tax credit if you have paid foreign taxes on income earned from foreign sources. And when we talk about U.S. corporations, we're speaking about U.S. C corporation or S corporations. So domestic corporations, they have paid or accrued foreign taxes on income earned from foreign sources may be eligible to claim the foreign tax credit. Okay. And what about U.S. partnerships? Well, partnerships, they have a foreign tax expenses allocated to their partners may file Form 1116 to pass through the foreign tax credit to their partners. So totally possible. And even if so U.S. partnerships here, we're speaking about LP, so limited liability partnerships, or LLC, limited liability corporations. Okay, so You have a pretty wide sort of canvas here. And you also have U.S. estates and trusts. So estates and trusts, they have paid or accrued foreign taxes on the income earned from foreign sources. They may be eligible to claim the foreign tax credit. Not a problem. But overall, you have a pretty large canvas, okay? And by the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 1116. And I'm just explaining to you how to use the form to claim the foreign tax credit. Let's talk a little about the granularity here. How do you complete Form 1116? And I want to give you a step-by-step guide. So what you want to do is you want to gather the necessary information. So we're speaking about, all your foreign income tax returns, supporting statements, and any other relevant documentation that verifies the foreign taxes paid, because the IRS is going to verify that. And you want to determine eligibility. So make sure that you meet the eligibility criteria to claim the foreign tax credit. And generally, you must have paid or accrued foreign taxes on income. The income must be taxable in the United States, and you must have foreign source of income. So the IRS, again, will double check that. So we make sure that you are really fair and square on that front. And so you want to complete the general information. So general information is pretty straightforward. We are speaking here about your name, first name, last name, your social, your employer identification number, and any other basic information that really can help the IRS to really sort of validate your claim. And what you want to do here is you want to complete Part 1. Part 1 is actually about your income. So you want to, we're speaking here about various sources of income. So we are speaking about wages, dividends, interest, rental income, or other types of income. And you want to follow the instructions provided on the form to report each income type separately. And we are speaking about income taxes paid or accrued. So here you will report the foreign taxes you paid or accrued during the tax year. And here you want to include the name of the foreign country or countries, the type of income taxes that they actually that you actually paid, the type of income taxes you paid, and also the frequency. And you want to also complete the foreign tax credit. And so another step you need to follow here is to think about the limitation on credit, because this credit is not unlimited. So if your foreign tax credit is limited in any way, such as the foreign source income being exempt from U.S. tax, you will need to complete this section to calculate the limitation on your credit. And you also have to complete the remaining sections of Form 1116. And it's one of those things where pretty straightforward, by the way. So when you're done, please review everything, sign the form. If you don't sign the form, the IRS will not process it. So you want to sign the form, and that's if you actually file the form manually. But if you file the form electronically, it's totally fine, not a problem. You will be able to get your refund as soon as possible. Let me give you a few special considerations when filing Form 1116. And so when we talk about this form, you need to understand that there are certain things you need to keep in mind. You need to keep in mind that qualifying income is really important. Ensure that the foreign taxes you paid or accrued are eligible for the foreign tax credit. So generally, only income that is subject to both U.S. and foreign tax can be used to claim the credit. And you have to have a separate limitation income. So if you have, let's say, income from multiple countries, you may need to calculate the foreign tax credit separately for each country. And this is actually known as a separate limitation income, SLI. And the foreign taxes paid or accrued in each country are allocated to the corresponding SLI category. And you also have to think about something called passive category income, the PCI. So things like passive income, such as dividends, interest, royalties, and certain capital gains, they fall under the PCI category. And so there are specific rules and limitations for claiming the foreign tax credit on PCI. You got to think about carry over and carry back. So unused foreign tax credits can generally be a carry back 1 year or carry forward for up to 10 years. And if you have unused credits from a prior year, or let's say you anticipate future foreign tax credits, you may need to consider the carry over and carry back provisions. And you also need to think about the tax treaty considerations. So let's say if there was a tax treaty between the U.S. and the foreign country where you are at, and this may impact your eligibility for the foreign tax credit. Some tax treaties may modify the rules for calculating the credit or provide specific provisions for certain types of income. You also need to think about the AMT, the alternative minimum tax. So this is, if you're subject to the AMT, it's your foreign tax credit may be limited. So the rules for calculating the foreign tax credit under the AMT are kind of different from the regular tax calculation. And so those are things you need to pay attention to. And please don't forget to pay attention to Form 1116 instructions also. And those are changing all the time. And bottom line here is that you can file the Form 1116 offline, online, or you can do e-filing. So offline, not a problem. You can offline just mean manual filing, or you can just even fax the form to the IRS. In terms of online filing, you can actually access tax preparation software such as H&R Block or let's say efile.com or Jackson Hewitt or whatever, and so to actually file the form. Or you can just if you have access to an approved IRS e-file provider, you are able to e-file it that way as well. I want to talk to you about some common mistakes to avoid when we talk about e-filing here. So basically, when we talk about Form 1116, make sure that you don't have the incorrect or incomplete information. Make sure that you are not using the wrong tax year. So when you are basically filing for this year, for instance, make sure you have the proper tax form that attached to it, because you're going to have to file Form 1040 for that matter with Form 1116. And also make sure that you are attaching supporting documents. So depending on the amount of foreign tax paid and other factors, you may need to attach certain supporting documents to your Form 1116. So this may include statements from foreign tax authorities, receipts, or other documentation to substantiate your claim. And ensure that you have included all the necessary attachments. And also there could be cases where you have incorrect currency conversions. So if you paid foreign taxes in a currency different from your country's currency, you will need to convert the foreign tax amounts to your home country, to your home currency for reporting on Form 1116. So use the appropriate exchange rates for the tax year in question and make sure that your conversions are accurate. Very important. Do not use data from dodgy websites. It must be an authoritative website. And not reporting all eligible foreign taxes. So ensure that you include all eligible foreign taxes you paid and or accrued during the tax year. This includes taxes withheld on foreign investment income, taxes paid to a foreign government, or taxes paid on foreign business activities. And also neglecting to account for limitations could be another bummer. So you do not want to have that. So be aware of the limitations and restrictions that may apply when claiming the foreign tax credit. For example, there are limitations on the amount of foreign tax credit you can claim based on your foreign income and the foreign tax rate. So make sure that you understand those limitations and that you are able to calculate your credit accurately. And also don't ignore actually carryovers. So if you have excess foreign tax credits that cannot be used in the current tax year, you be sure to properly track and carry them forward to future years. Failure to account for carryovers can result in lost tax benefits. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about the Form 1116. So let me do a quick recap here. So I gave you the overview, the approach, and now I'm doing the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.